Welcome to Growth and Exit Strategies for Software and IT Companies, the flagship tech conference of the World Financial Symposiums. The GXS conference caters to tech founders and investors in tech M&A, covering topics like investments, growth strategies, buyouts, sales, divestitures, and mergers. Thank you for joining us. Let's begin.
Well, let's move on to our investors panel, where we'll answer the question of, will your strategy get funded? Moderating this panel is Joel Cymberg, Senior Vice President at Corum Group, based in London. This is a great opportunity to listen to what investors are looking for. Joel, the floor is yours.
Okay, well, thank you very much for the introduction, John Scott. Hello, everybody, and welcome to the WFS Investors Panel. I'm Joel Cymberg, one of the VPs at Corum. And the goal of our discussions today are to provide a practical insight and advice on growth and investment strategies and the effects on a potential tech M&A exit from the perspective of tech investors and growth experts, a group of who we have here today. We're going to cover introductions now, some investments and growth questions, and a little focus in tech M&A. And at this point, I'd like to welcome Julia Padberg from Set Ventures, Ashim Egunjobi from Octerra Capital, Merve Zabci from Logo Ventures, and Rocio Pillado from Adara Ventures. I hope I pronounced everybody's names correctly. Apologies if I didn't. And at this point, what I want to do is introduce everybody to give us, cue you in turn, a little bit of an elevator pitch about what you do. And what we'd like to know is a bit about what your role is, what your company's doing, what you invest in, what sectors intrigue you most and why. So I'm going to start with Julia. Tell us a bit about yourself and the company.
Hi, I'm Julia. I'm one of the partners at Set Ventures, SET Ventures, based in Amsterdam. And we invest in digital solutions for a carbon-free energy. And these are pan-European, fast-growing Series A stage tech companies. And within energy, basically, we look at all sorts of sectors, including energy community, electrification of logistics, energy efficiency, in, for example, data centers or industry. And we just closed a 200 million euro fund, our fourth fund. So we're very actively looking at new investments.
Congratulations. Ashim. Ashim, please tell us a little about yourself.
Thanks, Joel. Pleased to be here today. So I'm managing partner at Octerra Capital. We primarily invest in more early stage companies, sector agnostic. So we invest across everything that you can imagine, from healthcare to education to logistics, fintech, neobanks, but anything that has IP-rich technology standing behind it as a foundation is really what we're keen to invest in. And our investments are primarily in the US, in the UK, and across Africa.
Thank you very much. Merve.
Hi, I'm managing partner at Logo Ventures, one of the managing partners. As a group, we manage 3 funds across which we invest in 55 companies. And we invest in early stage. We can do anywhere from pre-seed to Series A. And our main thesis is to invest in entrepreneurs emerging from emerging Europe, including Turkey and surrounding region, and help them scale in the overseas market, mostly in the US or the UK markets. And we invest in 5 main verticals within the frame of AI-driven businesses, of course. And this is like AI applications in different industries: cybersecurity, digital health, fintech, and climate tech.
Well,
that's who we are in a nutshell.
No, thanks for that. We're going to talk a little bit about AI later, I hope. And lastly, Rocio, please tell us about yourself.
Hi, I'm Rocio Pillado, partner at Adara Ventures. We are a VC firm based in Madrid, in Spain. We're investing out the 4th generation of funds. At the firm, we have one dedicated to seed and pre-seed companies, first tech companies, Southwest Europe. And then we have another fund dedicated to energy transition that invest in Series A and pre-Series A all over Europe. The common theme is we invest in enabled technologies in different industries. Some of them could be cybersecurity, could be health, enterprise software in general. and of course the Energy Transition Fund in energy and climate.
Thank you very much for that. Now, what we're going to do now is to pose a few questions about investment and growth. And what I'll probably do is sort of reach out to you in turn and just to, there's no particular limit on this, just feel need to share. Julia, any past examples of companies or technologies you were excited to invest in? And again, what qualities stood out the most about this investment?
Yeah, so one investment that we did 3 or 4 years ago is Sensor Fact. It's a Dutch company with global operations, and they have an industrial energy efficiency solution, including hardware sensors, but mainly software optimization algorithms. And what stood out for this company is not their extremely complex technology, because we as a fund believe that the technologies for the energy transition already exist. So it's not about inventing new deep tech breakthroughs, but really what stood out for them is their business model and their go-to-market, and the way that they had found an application to bring existing technologies to that mass market and have a massive impact, which they're successfully doing with thousands of customers worldwide already.
That sounds pretty phenomenal, actually. And I think that's interesting in the sense that it's about the business. It's not necessarily about the tech in that one. That's how they apply it. That's excellent. I mean,
exactly. Of course, they have interesting technology, but that's not the core of their innovation.
Absolutely. And I think a lot of the time we see situations where there's this inflection point where the businesses might be entrepreneurially or led by engineers, and they've got to get the go-to-market right. Yeah, absolutely. It's an interesting point. Ashim, I mean, any examples of companies that you're excited to put money into, and what stood out most for you about that as well?
Yeah, absolutely. Thanks, Joel. So I think similar to Julia, actually, we do believe that it's all about what you see and the potential and evolution of the solution. It could be the tech, it could be the founders, it could be the business model even. So a willingness on the founder side to continue to evolve is certainly something we look out for. But we are also all about disruption, and that is always an exciting space to play in. So one of the companies, for instance, that we invested in probably 3 years ago is called MTech out of New York. But what they focus on is building digital sandbox solutions for central banks across emerging markets. So they play primarily in the Caribbean and Africa and work with central banks to not only digitize their entire value chain, but they also then plug in the fintechs that are all obviously coming up in those regions to ensure that they're actually able to speak to each other and sort of regulate the fintechs and the entire ecosystem properly. So really exciting technology, great founder, and a disruptive sort of solution.
That's interesting. It's in one situation we have one where the favored thing is how you apply it. Disruption is important here. Rocio, in terms of sort of a past master for you, someone that did really well, that excited, and what was a great quality that stood out, one of your favorites?
I think most of our companies, they have in common great entrepreneurs. That's the key for us. Of course, we invest in first tech companies, so companies with a lot of technology. So we look for teams where they have this combination of great technology, knowledge, and and also a lot of business acumen to get that to market. So we look for that combination. That's why we tend to invest a lot in teams more than in just one solo founder. That's less common for us. We have a lot of examples. So one of the latest investments we did was in a company that was doing is like the physio training for the eye. So basically, they discovered there is plenty of reasons why people don't see well, and it's not you cannot fix it just with glasses. It's about training the eye to do some movements that sometimes you cannot do. So they invented this technology with 3D glasses and a screen and games and stuff like that. That with AI they can adjust the training to your sickness, let's say, and cure it and treat it very easily. So in this case, for example, there is 2 founders. One that is very clinical, into that, and then the other, which is general management from corporation, stuff like that. So this is the teams we're looking for, and we bet on.
Now that again, that makes a lot of sense, and that's exciting too. Now, Merve, again, any past examples of companies that you were really excited to invest in, and what was the quality that stood out most for you in that case?
Well, I think I agree with Rocio in a way that it's all about the founders, because at the end of the day, right now with AI, with ChatGPT, with Copilot, GitHub Copilot, etc., the ability for teams to create or replicate technology, it's way more faster and easier than before. So technology is kind of democratized, right, in the last several years. So what we are trying to do is that we are trying to back entrepreneurs who can differentiate themselves by the way that they do business through their business execution, right? So at the end of the day, it's especially if you're an early investor, it's all about the entrepreneur and their capability to establish good teams, retain and attract good talented individuals, and on top of that, make sure that the company is well funded to execute the future aspirations of the team. In that regard, we have invested in more than 50 companies, so we have a lot of outliers that have been performing quite well. But one of the companies that that kind of comes up, and it is actually established by two female founders. It's called Queen AI. It's a UK-based company, and what they do is that they, through their Gen AI model on e-commerce sites, they kind of understand the behavior of the user, of the customer, without using any cookies, on real-time data only. And by creating this behavior and by understanding the customer better, they are able to provide the customer with new recommendations, the way to increase basket size, etc., all in cookieless environment. And they are capable of increasing the sales by 30%. So that's one of the companies that we are pretty excited about, given that, as the privacy issues and cybersecurity concerns develop further, it will be people will stop sharing information. The cookie, retaining information on cookies will be harder. So I think what they're solving is the problem of the future. That's why we are very excited about that one, for instance.
No, you're quite right. Whilst Google has said they're not going to deprecate the cookie, you never know with them, do you? You never know. So that might come
Absolutely.
back. But again, that sounds like a very, very exciting company as well. So kind of the general theme I'm kind of seeing is, despite this being about tech M&A and tech investment, it's actually about the application, things that are disruptive, and often the quality of the teams. I mean, the next question sort of says here is, I'll put it to you all, is about how did those companies turn out and sort of what lessons were learned? Are there companies historically you really enjoyed invested in? Maybe they could be older than ones at the moment. And how did it all work out? And were there any key lessons that you guys have learned in general in backing founder groups? Julia, what are your thoughts?
So one success story in the past was Sonnen batteries from Germany. So we invested in 2014 when they were selling home batteries for households to store their solar energy and then use it at the right time of the day. And we invested because we thought this can be much bigger than that, but you can actually trade that excess energy with other households and with the grid, and monetize it much more and basically earn your battery back much quicker or get an energy flat fee. There are a lot of business models that you can build on top of those batteries. And the entrepreneur already just founded the company, and he completely shared that vision and started rolling it out and executing it. And in that particular case, it was really impressive how he grew the company from 1 to 500 employees and scaled that whole vision, built that whole digital business model on top of the batteries, and ended up selling it for a very high amount to Shell in this case. So the lessons learned there were also that you need to share this common end goal with the entrepreneur and partner with the right investors who share that same end goal, and then start building it and be very persistent. Because also this company, like many of our other successful examples have had very difficult times with cash shortage and where your vision becomes squeezed. But then if the entrepreneur and the investor share that same vision, ultimately you will get there in the long term.
Interesting. So kind of, there has to be a very deep level of joint belief between the investor and the entrepreneur and their team, because ultimately it's not necessarily a linear journey. But
Exactly.
where it works out, though, you get to 500 employees and an exit with Shell. That's impressive.
Yeah, or an exit to someone else. But indeed, this was
absolutely,
a good one where they did manage to generate a lot of impact on the climate.
Oh, that's fantastic. And again, that's a good thing too. Now, Rocio, what was your view on that one? So, is there one where, how did one of your businesses turn out, and what do you think the key lessons were learned in a success story?
In a success story, well, we have many success stories. Let's choose one. The most recent one. There is a company we invested in a few years ago called SeedTech. They do cookless advertising. It's advertising technology. And well, you can see it now. I mean, we invested when they were, 4 people, no revenues, and now they are 600 people, 18 countries. I mean, all over the place, right? And we invested because there was a founding team, one techie, 2 coming from Google. We believed in the team and the vision they had, and basically, I mean, they did great, but on the way, I mean, we've been through a lot of things. A dispute between the founders where one left, countries that weren't working, so we had to, fire the whole team and hire a new one a couple of times. Plenty of different things, right? So I guess the lesson from that is, even the most successful stories is never a straight line. There's always plenty of pivots, bad times, frustrations and stuff like that. That's why, as I said before, people are key, and investing in people with a lot of vision, but a lot of courage, resilience, that's the main important thing. I mean, I guess this company, for example, in the hands of different founders, even with the same tech, same, market and everything, the result could have been completely different. So yeah, team is key, and, just be resilient and, hold in there until you see the final line.
Again, it's kind of about the ability and the resilience of teams. I mean, I'm an ad tech guy, so I'm well aware of CTAG. It's a brilliant company. And there are an awful lot of companies that do very, very similar things. So to be able to drive that business and build how they have, it's been a phenomenal journey. And I mean, everyone in the industry, they're one of the many very success stories everybody talks about. Oh, it's a phenomenal business. So thanks for sharing that one. Ashim, what would be the company, that you like the way that it's turned out, that's been in your books, and what lessons do you think were learned?
I think the key lesson, I'll start with the lesson and then go on to the company. I think the key lessons here are twofold. One is that communication is key. And this is why, as Rocio has mentioned, the founders are so important, right? Because and communication is something that you can learn, and it goes 2 ways, by the way, right? So it's not only about the founders communicating, it's also about, as investors, how do we communicate with the founders within our portfolios? How do we support them? And, just ensure that the company is growing, because while you may have an aligned vision at the very beginning, if the communication isn't intact over time, because this is a year-long journey, right? It's over multiple years, and you've got to stay on the ball. So that's really key. And the second lesson really is around building the relationship, because again, you oftentimes get more communication when there is a really good, strong foundational relationship in place. It can be very difficult to communicate bad news, and I'm glad that both Rocio and Julia have talked about it not being a linear, easy journey. It is a mountain that you're climbing, and with every mountain, sometimes you slip and you got to pick yourself up. But it's much easier to communicate these, challenges or the through the tough times when you do have a relationship. And we especially love building a relationship even, years before investing into a company. So for instance, there's a company that we actually recently just invested in called What Now out of Tunisia. And this is an energy management company and great founders. And we've been monitoring them for about 3 years. So quite a while. And, this was just the right moment now for us to come together. So really excited to be together with founders who sort of share that same vision, but where you can actually see that over the time you've built that relationship, communication is flowing, and you're really able to, sort of be quite confident in being able to walk that journey together and, sort of overcome any hurdles that may, come along the way.
Again, that's a great addition. That's, in the sense of communication. And on top of that, you can feel the genuine enthusiasm you've got for investing in these businesses. And if you guys can maintain that relationship and the enthusiasm, the excitement about describing what these guys are up to throughout your journey with them, again, that's another key thing. When times are difficult, if you can both see the mutual vision and you've got an enthusiasm around it and you really love working with your teams, that really, really pushes it through. Now, Merve, I'm going to ask the same question to you, but I am warning you that I'm going to ask you the next one as well because it's about AI. So don't be aggravated if suddenly it's one question followed by another, because that I wouldn't mind you leading with that one. So back to where we are.
Sure.
What was the company that turned out, reasonably one of your success cases, and what was the lesson that was learned or the key takeaway from your success?
Yeah, I'll go with another edtech company, since that that has been the common theme, it looks like. So it's a company called Vask. What they do is that they help small companies that don't have in-house marketing capabilities to be able to publish ad in different digital channels and be able to check the performance. So it's funny. So we invested in the company when they had zero revenue, and almost like they had a prototype of a product, but it wasn't really there. And actually, they had a hard time getting initial traction. They had to do a lot of, tweaking with the product. They even had a bell at one point in their offices. Every time a customer purchased it, the bell would ring. That was such a big deal. But then they were able to find, through iterating and through, trying out different ways to approach their customer, they kind of found the perfect way, in such a way that their revenues from 10K MRR, increased from 10K MRR to triple-digit MRRs within 9 months, once they were able to figure it out. But we had to stand by the founder from the start, and all those 9 months, you put your money in, you're expecting the product to, ramp up, but it doesn't happen. And the guy is a bit, the team is a bit depressed because they are trying hard, but they have a hard time figuring it out. But finally, all of those efforts paid out. And now they are generating multi-million-dollar ARR on a yearly basis. And along the way, they had to deal with double-digit churns, and they figured a way to decrease that. They went through several cycles of price increases, and they were able to manage that nicely too. So it's a company that right now we are very excited about. It's called Vask. So that's one company that I can share here.
And what was the sort of the lesson you learned about, what were the characteristics of this, and what were the things that you managed to avoid that were so attractive?
I think determinism is the key. I think the founding team was coming from the industry, so they kind of knew the pain points of the customer. I think that's the key. And on top of that, not quitting, and making sure that trusting in your product, at the same time your understanding of the market, and iterating every time. So I think the key lesson is that we do see a lot of entrepreneurs, especially from tech backgrounds, who are trying to make their product perfect before going to market, or they are trying to make a new feature perfect before releasing it, but they just shouldn't wait. They would just, try to test it on the ground and get the customer's feedback and iterate accordingly. Or we do see it a lot when the companies are doing international expansion. Before entering a new market, they are trying to make it perfect for that particular, persona that they have in mind, but that persona doesn't exist. You have to touch that person. You have to, try and fail and collect all that data and improve your product or your approach accordingly. I think that's a key lesson, just trying out and, failing and then iterating.
I mean, that's super insightful in the sense that when people come out of industry and they understand pain points and they're creating a product to demonstrate that, and they're commercial people, not necessarily engineers, they can really demonstrate to VCs and investors, this is something that needs to be done if it isn't. And sometimes, you probably have people coming to you who are more engineering based and say, we've built this and we're going to find an application. And I suspect you haven't mentioned any of those in your key success factors, any of you. So that's interesting. It comes from pain, a lot of these, and people that can express how they're going to solve it. Now, one of the things to talk about now is you mentioned sort of early on about AI and how AI was democratizing things a little bit. The question that we have here is, how have the latest advances in generative AI changed your investment thesis? Now, Merve, can you take the lead with that one because you were the first to mention?
Yeah, sure. I mean, there are like multiple angles that we can, answer that question, right? It's a very open-ended question, but I think the main in terms of like changing our investment thesis, that I don't believe in technology moats anymore, unless it's an infrastructure play. And given the size of our fund, we have our new fund is going to be around like 100 million. So given the size of our fund, it's not $1 billion fund, and we don't do infrastructure AI plays. So that's why I think the moat that comes with technology is very, very limited. It used to be multiple years, but now it's only 9 to 12 months. So that's why in our investment thesis, we have to find entrepreneurs who have this understanding, right? Meaning that they have to find innovative products, but they also need to find innovative ways of execution and reaching the customers and navigating the market dynamics so that they can become the success story, or they can become that unicorn. Because right now it's very easy for people to replicate your product, or it's very easy people to reach to different audiences through some channels. So you always need to find a way, like different ways of doing things, and it's really hard to tell in early stages. So that's why it's very highly important to back entrepreneurs who are coming from the industry, who have complementary skill sets, and also who have built stuff before, built companies before, and gone through that pain of iterating and trying and making sure that the company has enough capital at all times. I think our investment thesis kind of tilted more towards this way versus trying to understand the product and tech behind it. Given that we are not deep tech, we are deep tech, but we are not investors who are in biotech, for instance. Yeah.
No, I get that. So sort of in mainstream tech, where you're not, for example, but even in biotech, you might have a point. Is that your feeling is that sort of the existence of generative AI tech, probably plus low or no code solutions surrounding it, allows the creation and pivoting and sort of evolution of any form of technology without the need of decades and hundreds of coders. So sort of coding power isn't quite the nuclear weapon that it was before, and in order to create a technical moat, low code, no code, or perhaps no code plus generative AI can create technology solutions that solve business pain points that entrepreneurs can do. So tying up the market. Yeah, is that what you feel?
Indeed. I was going to give you one data point. Like on the code that is written on GitHub, 70% of it is on Copilot. Like 70% of the code that's written on GitHub is on Copilot, meaning that it was written by non-humans, so to say. So that kind of gives you an understanding and of how things have changed in tech development relative to like several years ago.
Now that, again, I mean, that's a phenomenal figure, and that makes a tremendous amount of sense. So we're kind of going back to, well, I'm going to put the question around, but it sounds like we're going back to basics. When somebody says to you, what's your why we win strategy? What are your business fundamentals? How are you going to get me my ROI? Why should I invest in you? You're looking for very different type of moats, probably it solves a pain point, and there are commercial reasons why they might be able to create a moat, in the sense they might be able to tie up a supply or tie up demand, and you want it backed by experienced serial entrepreneurs. That's a success recipe now. I mean, again, back to the way it was before, I think. I mean, Julia, what are your thoughts on this, about how AI is affecting your investment thesis and what you're looking for now?
Yeah, so we're fundamentally still looking for the same thing. So not somebody who can develop the best AI algorithms or the best deep technology, but we're looking for truly valuable applications that accelerate the energy transition. So if Gen AI is an input for that, that's obviously great. But we wouldn't invest just on the basis of their claim that they have better Gen AI than others, or a better application of that than others. So we do see definitely in the energy transition that there are applications of Gen AI that could help to make it more productive, such as energy production optimization or grid stability and flexibility trading, fault detection and prevention, and for retailers, also productivity and customer service. But then we're still looking for those excellent teams that can actually show us their application and the traction, and them solving a customer need better than others because of their experience in that market. And then in general, if you look specifically at the energy sector, I believe AI could be an accelerator, because all those Gen AI computations obviously consume a lot of electricity, and typically data centers consume green electricity for that. So a lot more capacity is being built at the moment, and that's obviously a good thing also for the rest of the ecosystem.
I mean, that makes sense. I mean, one of the things sort of pull out is that, again, generative AI is great, but ultimately it's swinging the needle back to people that can provide great solutions to pain points and have the ability to build a business to see it through profitably. So again, back to the quality of the team and back to the efficacy of the solution to the business problem. Okay, again, I mean, let's see if the pattern continues. Ashim, what are your views about how AI is affecting your investment thesis, etc.?
So for us, it hasn't affected the thesis or the overall thesis significantly. We're quite clear that we continue to invest in technology startups. They don't have to be deep tech, similar to what Merve was saying, but they obviously have to have tech incorporated. That's always been our thesis, and have got to have, for us, it's important that they do have some IP that stands sort of behind them, because we do still believe that is, a big factor with regards to defensibility of, sort of the solution overall. Now, it is going to continue to be important for startups to actually look at how they can all incorporate AI into their solution. So it will no longer be good enough to say, oh, I've built this, technology, this is my IP. But the question is, okay, well, how have you incorporated all of these, new technologies into what you're already building? And that will then really be the game changer between, how fast you can grow, how much you can scale, how quickly you can bring your tech to market, or how quickly you can continue to push new updates and all of those things. So that for us is really key, to see that there is actually that incorporation of Gen AI. We are really excited to see the disruption that Gen AI has brought over the last, especially over the last, say, 24 months. There's been this acceleration, like a rocket almost, of adoption. And that has meant that there is now a much quicker speed in, tech development, in churning out products and bringing them to market, which is really exciting. But what it also means, and because we invest not only in mature markets, but also in emerging markets in Africa, for instance, we do see that Gen AI especially is bringing a lot of democratization into the sectors across board. If we think about the healthcare sector, for instance, a lot of the AI applications that you now have, especially with regards to how there's some predictive analysis, that has really sort of been a game changer in how the healthcare sector, telemedicine can actually operate, diagnostics can operate in some of those emerging markets where you just don't have access to a lot of the very sexy, tools all the time. So definitely a game changer. We're really excited to see it. And we look out for startups that look to or have already incorporated it in their sort of everyday thesis.
Gotcha. So, in your investment thesis, if there are startups or early stage companies that can, for want of a better phrase, turbocharge themselves by including AI in the model to reduce on costs or to scale faster, then for you, that's a really important use of AI, and ultimately you'll look for businesses that have got the ability to move. Brilliant. Again, that makes a huge amount of sense. And Rocio, I mean, sort of where do you see AI fitting in and informing your investment thesis?
So we never had a very fixed investment thesis, let's say. We're turning 20 actually next year. And, in the last 20 years, we saw, mobile being the thing, then cloud computing, right? AI, machine learning, then blockchain, now with Gen AI, of course, you need to adapt as an investor at some point. You need to be quietly flexible, I would say. And for us right now, I mean, we've been investing in AI for the last 20 years, right? Different AI, but now it's true that we're focusing more on optimizing infrastructure, making it secure, the usage of the enterprise users, so processes, surveillance, audits, things like that. But still, we are still focusing on, making, making more technical the health industry, and in there they use AI, but it's a less sophisticated version of AI, right? So I guess Gen AI will come to the health industry, in some years. Now we're looking at, quantum also and how Gen AI can, affect that. We didn't invest in any quantum startups in the last funds, but maybe in this one, who knows, right? So we're quite open on that sense. And I think that's important, but clearly, as Merve said in the first answer, I mean, most of the code now is generated by a machine, right? So the differentiation is not going to be on the code itself, but on the usage, on the vision, on the team, and certain things. But tech is still important for us, and you can do many things with AI, but not everyone has the knowledge to do it. So still there is a human component about how to use it in a smart way and efficient way.
So the fundamentals are what they are, with not necessarily AI being just part of the evolution of how things can be done better, but ultimately it's about the people, the positioning, the pain points, and maybe more tangible rather than code-based modes. No, absolutely, exactly. I get that. Now, the next question, I mean, it's one that we have to ask this. This is aimed at entrepreneurs and people looking to invest or to gain access. They typically watch these recordings for WFS. So what are the typical mistakes that you've seen entrepreneurs make, and what advice would you give for avoiding them? What are the big ones you see entrepreneurs make? Not just people in your portfolio, but on a general basis. You meet a lot of people. The ones that make mistakes you perhaps might not invest in. But what are the mistakes you see entrepreneurs make? And, what tips would you give or advice for avoiding them? Julia, what are your thoughts?
Yeah, so one thing that we've unfortunately seen a lot is entrepreneurs that are trying to do everything for everyone. So have a really big dream with a really small company and really try to solve all the world's problems with their own company. And to me, the answer is that it's incredibly hard to find the right balance between flexibility on the one hand and opportunism on the other hand. So really, the trick is in carefully listening to your customers to really draw lessons that apply to all of your customers, rather than building specifically customized solutions for each individual client, because that just dilutes management attention too much and it limits your scalability. So be very focused on what you want to do and carefully listen to your customers to fine-tune that, rather than doing everything for all the different customers.
Makes perfect sense. So those that don't listen to that advice will clearly not scale particularly quickly. They'll just get bogged down and they won't have the traction that you need. And again, sometimes you do tend to find with founders and entrepreneurs that, there is that characteristic where they just want to be everything to everybody. So do you find that the balance of a team sometimes helps temper the enthusiasm of maybe one or two members of the leadership in that way?
Yeah, a team and a board. So usually
Yes.
you see that there are some different forces within a management team, but generally entrepreneurs are just very excited and visionary and optimist about what they can do, and then the board is also there to help them, challenge them, set boundaries.
So the typical mistake could be is maybe not having the right structure around some of the key drivers of energy to keep them focused. So what I liked about what you guys were saying before is that you're looking for decent, well-balanced teams. Occasionally you do meet individuals who are an island. They are everything and can do everything. But most of the time you're looking for balanced teams where the CRO, CTO, CMO, COO, and CEO, well, maybe it wouldn't quite be that big at the start, but they will balance each other out, right?
It's of course great if people can do everything, but it's very dangerous if they think they can do everything, or if they know they can do everything. Then it becomes really tricky to build a company that scales.
Got that. But Rocio, you've invested in a very well-known business. You mentioned SeedTag, that is that creative business that did get there. So what are the mistakes that they avoided? How did they, talk to me a bit about that, because they're very creative people.
Yeah, I think in that one, I think there were market challenges more than mistakes they did. I think they did most of the things.
We might be having a little trouble with your connection. What we might do... Okay,
let's try again.
In the room. You're back in the room? Okay, try again.
Okay, I'll try again. No, I was saying that most of our founders do plenty of mistakes. So I think state two that are most often seen. So one of them, which is about cash flow management. So most of the entrepreneurs are focused and in love with their product and, very focused on the go-to-market and plenty of things that are really, really important, but they don't focus enough on, the cash they have and how to use it efficiently, etc. So this is one of the key things that, for example, the SeedTag team did very well. So they use very, very small of capital to get to where they are. And they were very efficient, very conscious of, the investment they were making. And I think that's key to create a scalable business. That's key. And we see a lot of businesses in trouble just because they didn't look at the cash flow statement, in a while, which is a mistake, both, as Julia said, for board members and entrepreneurs. But, sometimes they need to be, on it. And I think regarding the team, most of the mistake we see is when they scale, the entrepreneurs tend not to hire the smartest people in the room, but the people they like a lot of times. So they want people with, their own culture and all that, which is very important. But sometimes you need to hire people that are smarter than you. And, that's okay. And you don't need to hire people just because, you can control them and because they're nice to you. And I think this is something that, some companies have trouble with, and you cannot scale a company without the right people. As they were saying before, an entrepreneur cannot do everything. And if you don't have the right team, it's impossible to delegate well and to trust the team you have. So I think these two things are the most relevant issues we see in entrepreneurs. Yes.
So understanding how to hire people effectively and understanding how to work within the team in focus. Now, I'm going to sort of go over to Ashim and Merve in a second, but I am aware of sort of where we are in terms of the time. So what we've gone is we've spoken about the mistakes of entrepreneurs and a bit of advice, but there is one more section to go, and I'm going to sort of pull Ashim and Merve in to sort of take the lead in answering the questions on that one. And this is about tech M&A and exits. So, the things we want to talk about next, I think, for the next 5 or 6 minutes are going to be why should entrepreneurs consider looking for investment versus M&A, and what role your firm plays in the exit process. So Merve, tell me, why should entrepreneurs consider looking for investment rather than M&A, which means sale in this place, or what role do you play in supporting that process, getting exits as well?
It's a tough question in a way that no one knows the right answer unless they go with a certain path, right? Because most M&As fail, right? That's the beauty of M&As, so to say, and this comes from a person who spent, a nice decade in private equity and investment banking, more than a decade in PE and investment banking. So, and the data says that. Anyhow, I think it all depends on the expected value of the firm, right? Meaning that and also the market conditions. Can you survive without an M&A? And also, what are your options if you go solo? Meaning that with an investment, and also, is there a demand for such investment? So I think those are all, you just need to make. Yeah, go ahead.
Yeah, let me put one thing to you. So, when entrepreneurs are looking for sort of investment versus M&A, that means scale versus selling. So, you think that it's mainly the inflection point. There's more market opportunity to scale, and then there's a thesis that someone's going to back to do it. Whereas, if it's a sale, you've taken it as far as you can go without being part of something bigger. Do you feel that's the inflection point? Is that where you're going with that?
Yes, actually, right? Because at the end of the day, once you do a sale, that means that you are done with building your own equity. Indeed. Right? You start to work towards another person's or another entity's equity, right? You have some carry or you have some upside baked in, but that upside is typically, it's not as high as going solo or doing the scale path or following the scale path on your own. So that's what I mean. So it depends on, I think it's all comes down to assessing the opportunities, right? And understanding what each scenario entails. And also knowing that each scenario has its own ups and downs. I mean, as I said before, most M&As do fail. Most LBOs do fail. So it's not the plain vanilla path when you sell your business to someone else. But if you want to take some chips off of the table and, diversify your own portfolio, or if there are investors, in your cap table who wants that liquidity event, then those are all different considerations that you have to take into account.
I would agree with you.
Yeah, it's a very political answer, or
it is. I mean, E&Y state that sort of half of businesses do fail, and what you mean by fail is that the earnouts don't quite go the way that one would plan.
Yeah, exactly. Yeah.
And as I said, if one focuses on, I say this to be controversial, if you are being advised by people whose skill is finance rather than integrating businesses, well, of course you're going to have that failure rate. I think you might find that if you sort of understand how to operationally integrate businesses and both buyer and seller are aligned and they've got the right advice, the post-deal failure rates are a little bit less. But you wouldn't get that from an accountancy company. Because,
even if corporations, they hire a lot of advisors, they bring in a lot of management consultants, like people who have their day-to-day jobs in terms of integrating, they still fail, right? I think it's a very tough thing to merge two enterprises that are coming from different histories, different cultures, different growth rates, different products. So I think it's more than art than science, so to say. But at the end of the day, it depends on what is on your agenda, what's the prospects, what's the offer, all those things they do account. So
I agree. I'm going to move on to Ashim and ask a question there, but just to the entrepreneurs that are watching, there can be successful. I'll say this: you can sell a business. You can sell a business successfully, but I think the quality of the structure you put in place and understanding the earnout, the integration, and also, is there a thesis post-sale where both companies can genuinely create value together? If that subsides, you will have a good experience, subject to the politics and market dynamics.
Yeah, Joel, let me just reiterate myself. What I was trying to say is that both paths have its ups and downs.
Completely.
Sometimes we urge entrepreneurs to do an M&A because that's the most wise things to think to do, right? Because most businesses, they come to maturity, right? And at that path, if there is like an incumbent player in the market, and if they are giving you an offer, sometimes it's wiser to take that offer now versus doing it on your own and struggling and failing and eroding your equity value. So don't get me wrong when I say that most M&As fail. I'm just saying that it's a very tough decision. And what we try to do as the board, even though we are early stage investors, we are trying to be, comrades of the entrepreneurs and the boards along the way. What we are trying to do is that we are trying to lay out all the scenarios with its all transparencies, with ups and downs, with potential analysis, and to portray potential outcomes to entrepreneurs and let them decide what's best for their team, for themselves, as well as their investors, so to say.
I think your portfolio are very fortunate to have you actually supporting the entrepreneurs to sell when you think they've gone as far as they can, rather than wanting to meet ROI objectives, which some of the bigger VC stateside can do. I think that's a tremendous philosophy and level of support. They're very fortunate. Now, Ashim, the question to ask you is what role does your firm play in the exit process? And what I mean is just help with future liquidity events, maybe finding M&A partners. What do you do for your firms for that?
Yeah, I think that's such an important question. And it's actually probably one of the questions that founders should ask investors before they allow them on the cap table. I think oftentimes, we have this skewed view, and this is to the founders that are watching, we have the skewed view that due diligence only goes one way, where it's the investors diligencing the founders or the companies that they're about to invest in. But, it really should go both ways, where the founders are also asking, very smart questions, short, medium, and longer term questions really around, well, what is it that you're bringing to the table? And this supporting in, the exit scenario planning, I suppose, that is actually one of the really important aspects that investors can bring to the table. And it can look in different ways because all of us investors have different skills, we have different networks, so we have different abilities to actually, support founders in that process. Some of the things that we do as early stage investors, we actually try and sit with the founders quite early on, actually, with regards to that strategy, right? So what's the big picture? Where are we going? And oftentimes that's also a market-based conversation. Not all markets are the same, right? So in some markets, M&A is one of the only paths to an exit, for instance, because an IPO is not a path because the markets are too shallow or, what have you. So it's really important to, sit with the founders and really look from a strategic perspective. Well, what is the sector we're actually playing in? Who are the potential M&A targets out there even that may come in and want to acquire or merge with this company? Is there another path, right? In the next fundraising round, what is it that you need to be looking like in order to be attractive, right? Whether that is from a revenue perspective or, EBITDA or whatever, really working with them, because we speak with all the other investors. We have those networks. We're able to say, hey, you're a Series A, B, C investor. What are you looking for in a deal? What does this company need to look for? Let's start introducing you to certain companies so that, there is already that relationship being built and we're clear on what it is that will make a successful sort of, a company to invest in for other investors. And the same goes for M&A, strategic partners. Start identifying these strategics, have them come into the cap table if they're willing, even if it's just with a small ticket, and then start building that relationship. And that's where we can really add a lot of value.
I think we're going to roll up soon, but I'm just going to comment and say, I think that's phenomenal. One of the things that we say to people or companies who don't have, even bootstrappers don't have the investors, is flirt with the buyers, understand how you're going to be positioning your company when you exit as much as you're positioning your product for sale. Because ultimately, unless you're going to give this company to your grandchildren, what are you building it for? And it's really refreshing to hear an investor talk in those terms about the level of preparation, about preparing the company for sale as much as the product for sale. That is phenomenal. Now, we are drawing to a close, and I think at this point, I just want to thank all of you, Ashim, Rocio, Julia, Merve, for your time and all of your answers today. It's been fantastic, and obviously thank the audience for attending. And at this stage, I'm going to pass the spoon back over to you, John. Thank you very much.
Thank you.
Thank you.
Thanks.
To our audience, we appreciate your participation today. Visit wfs.com for more information on events coming up. If you'd like to get in touch with the WFS team, speakers, or the Corum Group, email us at info@wfs.com.
World Financial Symposiums, the education centre for tech leaders.